All right, so we're going to talk about news in this video. So, high impact news specifically is what I'm talking about. Now, you need to keep an eye on the news releases as far as the time of day that they're scheduled to come out. And there are, popular websites that offer a schedule. And again, particularly, we're talking about the high impact news. Now, as you may or may not have found through your trading experience, when high impact news is released, usually the charts will pick up in activity. You may get sort of spiky price action, right? More volatility. It lasts about 5, 10, 15 minutes, and then you sort of return back to your regular activity. Volume can be very high and exaggerated for 5, 10 minutes. So, we need to know when that stuff is coming. People are telling me, sometimes, what happened here? And I was, well, you didn't check news. That was a news release. So you have to be prepared for those times. If you're in a trade, you may want to lower your risk, move your stop, et cetera, and we'll get into that. So how do we deal with this as far as, is it just some random thing we can't control and we don't understand? No. So as is taught in VSA, we're not looking at the news itself. We're not looking at the release. We're not looking at the numbers. All I care about is what time is high impact news. I don't care when it comes out. I don't even check what the numbers are, whether it's unemployment rate, important things. I don't even look. I'm trading based on what I see smart money doing on the charts. Now, what's going on with news, right? Can we use this to our advantage? Yes, we can. Now, I'd like to just draw some things to illustrate. What we're looking at is, on news releases, we expect some higher volatility, but we're looking at, here's the key, we're looking at the reaction to the initial move on news. So not the initial move, but the reaction. So let's give an example where, let's say on this day, without doing our total analysis, but let's just say here, on this day we have a support, and we saw some buying off that support. And we should already understand that. Now, let's say we're just sort of sitting around, and price may sort of die out as you're waiting for high impact news. It's coming out in 20 minutes, and you're looking like that, right? Now, let's say the news comes out, and in the first 5 minutes, 10 minutes, this is what happens. Let's say there's a couple of 5-minute candles creating this situation. And now let's say generally, besides this, we've seen strength in the background. It's a bullish environment, whether it's a markup phase that's pulled back or, accumulation phase, right? Let's say we're generally bullish. And this is our initial move on news, the first 5 minutes, 10 minutes. So we're looking at the reaction to these prices. We're not considering that this down move means bearishness. It means that we're looking to sell. It does not mean that, even if, regardless of this strength here, even if that wasn't there, we're always looking at the reaction. So ideally, we're waiting a minimum of 15 minutes after the news release to even consider getting into a trade. There are rare times where I will take it sooner, and I'll cover that. But so to go through the usual process here, let's say in this case, again, we've seen some strength in the background. We've moved down on news. Just that alone, strength in the background, and we're moving down initially on news. Next thing it pops into my head, it could be an opportunity to buy. Or is smart money going to take advantage of lower prices to buy? Whether it's on bad news and the fundamentals say it's supposed to go down, well, it may go down in the next month, but scalping news releases is a little crazy, and very often is a trap. It's a trap. So the breakdown is the initial move, and the reaction, if we are continuing to follow our storyline and see that smart money is still buying, it could be this. And you could find yourself 15 minutes or so after news. Let's make it really high volume because it was news. You can find yourself 15 minutes after news back to where you started. Let's say price was here when news came out. 15 minutes later, you're there. Just or you're generally lost the progress of the initial move as it was rejected. This, to me, tells me smart money took advantage of the large amount of selling by the herd in this concentrated amount of time to buy up a lot. So again, let's say this was bad news. Smart money's positioning long. They don't give a crap. And on bad news, the herd or the majority of traders that aren't the huge smart money start selling, and the market starts coming down. There's a lot of volatility, but it's getting bought into by smart money. So to make a point about why exactly it's advantageous at this point for smart money to buy, particularly at this point in time, is because of all the selling. Remember, they have very large orders. They move the markets with their orders. They have to enter in blocks. They want to enter long at low prices. And if you're a shopper and you're out shopping and you know that you're going to buy so much that you can affect the supply-demand balance and the prices, and you find as you're going to shop that there's a lot of items available at a cheap price, not one or two or three, a lot, more than usual for that day, then you're going to be able to buy at a low price and make that trade and make that exchange without affecting the supply-demand balance as much. There's a lot of selling, a lot of available sellers at a low price. That tells smart money if they want to buy a lot at a low price, as they tend to do, or they may do, this is an opportunity for them. So again, seeing the reaction, the effort versus result, the reaction to the news move, the initial move, we can tell if they did that or not. Okay? So in this case, 15 minutes after news, give or take, 12 minutes, 20. If you wait for 5-minute candles, you can also wait for the 15-minute close, which in this case, let me attempt to draw a candle, could look like that on the 15-minute chart, because it moved down in the first maybe 5, 10, 15, 5, 10 minutes of news, and then closed back up near the open as a reaction to the news price. And that could be that high volume, on a 15-minute chart looking like that through the support, or even the support here as just a pin popping through. Fake breakout. So again, it's the same principles we know. We just know that, on news, we don't have to worry about the initial move if it's not going with our background. In our case here, bullish background, and it's moving down on news. Again, it's an opportunity to see if smart money buys into it. If they do, and you find yourself getting back to normal volume levels, and you see that it turned into buying, you can go ahead and continue to look for your long situation. Maybe it's a no supply. Maybe you already had an entry, but news came out and you waited, right? But then you see this, and that gives you the confidence now to enter 15 minutes after news. It's how you want to do it. You can wait for a no supply, but you know that you have the green light, and you just sort of waited because of news, and news says it's still good. They're still buying. You could be a little more conservative and wait for another no supply. Again, these are tools, and you can, over time, judge and decide how aggressive you want to be. But more than likely, I would, not just jump in, but see the behavior, see maybe if I get a no supply after that point. Depends really how good it was before that point. But we know this tells us to continue to look for our trade. Okay, so that's one example. So we can just use this principle of looking at the reaction to the news move, not the initial move, to generally guide us. So again, let's just look at variations. If it moved down on news and 15 minutes later, it's sitting down here and sitting down here and doing this, this is not telling me that they're continuing to buy off this level. Maybe they're dumping their positions on news, right? So the reaction to the news move is not telling us to buy in this case. So just to show different things. Another example would be, well, I could just start a new one here. Let's do that. Another example would be, let's say, we'll just start with the same thing. We have some strength in our background. We have some general idea of where we're going to trade. And we have to have that behind us, because if we didn't have an idea of what we were doing and the news came out, we're not going to take a trade off the news. We're not going to trade 15 minutes after news with nothing else in the background. We need to be following a storyline, ideally, to enter any trade, not just no opportunities and then suddenly something pops up and we're going to jump in. We want things to come to us, and we want to follow the storyline. So again, having a background here that's bullish, but coming into news, let's say we're just ranging around. It tends to get quiet before news. You may or may not have had some entries, and now news comes out. Let's say maybe that's the automatic rally, and just giving hypotheticals here, but tend to happen. So news comes out and it starts to push up with strength in the background. Maybe it's a really nice situation. Again, it could be a double bottom or whatever, right? So we have a bullish environment, and it starts to do this on news. Now, am I going to take that trade? Now, maybe there was even a no supply. Maybe I could enter, but news is coming up. You just want to be more cautious and really, again, look at the reaction. So if price moves up and it stays up there, 15 minutes after news, We're sustaining it. We didn't reverse. We didn't find sellers. It's not a trap move. 15 minutes or so after news and looking at the 15-minute candle close, are we seeing weakness? And let's just say that our news volume did this, very likely picture here. So here's now news comes out right there. Okay, and then 5 minutes, 10 minutes, 15 minutes, it starts to slow down. This is your typical picture, and then you get back to normal volume, right? So this is high impact news, typical. Now, what happened on that volume? Initially, it was move up. What was the reaction to the higher prices? What was the reaction to the higher prices? No selling. Acceptance of the higher prices. So now, in this case, the reaction says there's no problem. And if we have a bullish background, and that's what happened on news, and 15 minutes later we're accepting these higher prices on regular volume, it's all good. There was just some buying on news. It wasn't a trap move. It wasn't sold into, and this matches our background of bullishness. So we can look to trade, maybe no supply, etc. Let's see. That's all I wanted to cover, really. That really covers all the bases there. If you don't worry too much about the initial move, and 15 minutes later see where you are. Did it accept those new prices, or was it rejected? Does it match the background situation, what that says now that you have that action-reaction? Does it match the background, and you can continue to look for your trade and follow that storyline? Or does it cancel out the background and say, well, it just moved to an area where there were buyers, and this time there were no buyers, and it's sitting below that price now on regular volume. Okay, so now it's telling us that smart money isn't sustaining their buying, and off the news move didn't confirm the background situation. So that's pretty much it. So, as part of your routine, as the first thing I do before I even look at the charts is look at when news is coming out. For me, trading New York session, it's usually 8:30 a.m., maybe another one at 9:30 or 10. It's usually one or two high-impact news. So it's the first thing I do before I even look at my charts because I know that that's sort of a schedule. If I look at the chart and say, okay, high impact news is coming out in an hour, and I do my analysis and I see that things are just kind of slow, it's probably centered around that. I'm going to have to wait for that release and then maybe get an opportunity before that and so on. If I'm in a trade, again, just note how things tend to act on news, knowing this. If you're in a trade and it goes, it starts going against you on news, you might want to move your stop to break even and see the reaction before anything else and make sure that move is going to still line up with your trade. You can also have just very impulsive, spiky moves. So, for example, if you're in a long trade and it moves up to a target that you had in mind on news, a resistance, and you're hitting your first target of 30 pips maybe, or your second target of 50 pips, and it's hitting that level on news, and it's very spiky, very, very volatile stuff. You may want to grab that. Rather than, if it wasn't news, you could sort of give it 5 minutes, see how it reacts to that resistance, see what goes on. But if you're looking at news, as soon as it hits and starts to pull back, and if it's spiky, I'm going to grab a little because I know those impulsive news moves can just, shoot up, shoot back down, and that sort of thing. So if I hit a target, during a volatile news move, I'll try to grab it, fairly quickly. Maybe give it a chance to plow through, and if not, grab it, give it 30 seconds instead of 5 minutes, basically, that sort of thing. Okay, so that covers everything for the new stuff. Always be aware of that. Always check as part of your routine, in the beginning when you're doing your higher time frame analysis, and check in the beginning, see when those news releases are scheduled. Okay.